Hi, welcome to Let's Talk Bonds, the fortnightly podcast from INR Bonds. I am Arjun Patsati, and in this fortnight podcast, I'm going to talk to you about the the fact that PSU bonds make one of the best investments in the market because it's very cheap. And uh, the takeaways from this podcast for financial advisors and investors will be that investing in PSU bonds can give you a good option in a market that is full of uncertainty and volatility across asset classes, including equity, uh, corporate bonds, and many other asset classes as well. Right. Coming down to the topic now. First, what is PSU bond, or what are PSU bonds? PSU bonds are bonds of public sector units or public sector companies which are owned by the government of India. So they're called PSU bonds. So typical PSU bonds will be issuers like Power Finance Corporation, Rural Electrification Corporation, the NABARD, IRFC, that is the Railway Finance Corporation. NABARD is the National Bank for Agriculture and Rural Finance. You have other bonds like NHAI. You have the National Housing Bank. So these are all coming under the core areas of the government, uh, and very important to the government in a strategic sense. Hence, they are what is it called, AAA rated PSU bonds. And all these bonds actually also form part of the Bharat Bond ETF, which is the PSU bond ETF, which is floated by the issued by the government of India. And hence, PSU bonds are seen as the almost in terms of credit risk, are seen as equal to just below the government bond, that is G6. And sometimes many PSU bonds trade at better levels than even state bonds, state government bonds, and largely because some of the PSUs are seen as safer than even state development bonds. So, given this, the PSU bonds also become one of the most liquid bonds in the bond market, and at any point of time, any investor can buy and sell these bonds. So, when there is enough liquidity in the market, the investors also get the best prices, the price discovery in these bonds, and they are always sure of where they are able to invest in these bonds. And because of the Bharat Bond ETF, which is the largest bond fund in the country, well over 50,000 crores. So that makes it much more in terms of liquidity and price discovery for PSU bonds. Why are PSU bonds cheap? Now, if you just take a couple of years back, when RBI had brought the repo rate down to 4%, PSU bonds were trading at almost 4%, 5% levels, 4.5 to 5% levels. These are 3-year PSU bonds. And now, with the RBI taking up the repo rate to 6.5%, PSU bond yields have gone up from 5% to almost 3-year PSU bond have gone up from 5% to 7.8% kind of levels. Even the 1 and 2 year PSU bonds have gone from levels of 4% to 4.5% to levels of over 7.5%. So the bond deals have really risen, largely because of the fact that RBI has started to hike rates, and and from very low, very expensive levels of yields at 5%, investors got nothing in by investing in PSU's bond. But at 7.8%, they are getting a very good yield. They are getting safety and liquidity. So all this put together, PSU bonds are much cheaper than what they were in terms of uh, the valuations. Now let's look at the other asset classes, including corporate bonds. So when we compare um, high yield corporate bonds, we have seen yields almost staying flat. So even at 4% repo rate, many high yields were in a 9 to 11% kind of levels. And even at 7.5% repo rate, 6.5% repo rate, high yields are same at around 9 to 11% kind of levels, maybe slightly higher. So they've not really gone up. So they've not really become cheaper. Maybe they were cheap in the beginning, but now with rates are higher, then they have become a little more expensive than what they were 2 years back. And even equity valuations, clearly with the interest rate hikes and expected slowdown in corporate um, earnings, global risk factors as well, and the way equity markets have been moving, almost very low returns. And we have also seen that good performance is being rewarded with stable share prices. Bad performance is being beaten down. So valuations are typically much has is you are typically what you call in an equity market balance is there is a valuation correction. So with this, then you have other asset classes that have really done badly, like cryptos and many other things. Commodities have gone up and come down a bit, and gold has been very flat, so not really doing too much. And the rupee itself has depreciated. So all this put together is making a good case for investors and financial advisors to look at increasing weights of good highest quality and highest safety bonds, which have become cheaper in respect to other asset classes, as a good investment option, as good part of the portfolio to provide stability, as also all the other surrounding factors like liquidity, which makes the portfolio much safer and much more stable in an uncertain economic and market environment. Now, PSU bonds, if you're investing in a 2 to 3 year PSU bonds, can also give potential capital gains if the feeling is that interest rates are peaked out or are peaking out in the next 2023 24 financial year. And if RBI has been done with repo rates, maybe they take it to 7% or 7.5%, whatever it is. And if they are seen as peaked out, and then after markets start to factor in that in 25, 24, 25, and 25, 26, the repo rate can come down or stay stable at say 7% or 6.5%. Then there is a case for a bond, PSU bond yields to fall as well, because markets will automatically look to buy into bonds because the fact that interest rates are coming down. And hence, when the interest rates come down, the portfolio itself will look much better in terms because prices of bonds rise when interest rates fall. And investors who have been holding the bond for, say 1.5 years, a 3 year bond for 1.5 years, can make a potential capital gains, which can give returns of well over 8% as well for a very low risk strategy. Or if interest rates don't go down and prices remain stable, all they need to do is hold the bond to maturity, which anyway is giving a very good yield. And investors are pretty much safe in this kind of a strategy. Hence, the case for PSU bonds is getting more attractive. And the best place for financial advisors is obviously INR Bonds Partner Portal to see all the PSU bonds and all the other bonds on offers, or and see the whole process information and all the uh, other information they require to take a very strong investment decision for their clients. So log into INR Bonds Partner Portal and see your fixed income assets grow. And curation for a curated list of bonds, Quick Invest by INR Bonds is the best uh, app for you. Download the app now and see the curated list of bonds on offer. Select the best bonds, and you'll see a lot of PSU bonds, and take the best investment decision and invest in a asset class that will become very cheap. Thank you very much for listening in and do follow us on all podcast channels.